So I'm proposing to start, even though I think that there should be more people to join. So I'm very happy to be with you today to talk about the impact of the reduction of international aid on financial inclusion service providers. We're going to few remarks. So please be sure that your microphone is mute because we're going to. Well, it's always better to work that way. We're going to keep it for an hour. If you do have any questions, feel free to, of course, write them on the chat bot. And the webinar is being recorded, and so we're going to share with you the presentation and the webinar recording after the meeting. So I'm very happy to be with you today. I'm Philippe Guichandu. I'm the General Secretary of the Grameen Credit Agricole Foundation. We are working in around 40 countries currently, mainly in Africa, Asia, and Central Asia, supporting microfinance institutions around 80 partners all together. And I will be joined by Josephine Mochina. She's working for Vision Fund Kenya. And she is currently the Partnership and Project Senior Officer, and she drives all the strategic partnerships, the product innovation, as well as fundraising and social impact reporting. So welcome, Josephine. And then we're going to be also with Dr. Akil Ahmed Khan, who is currently the CEO of Mitrata Inclusive Financial Services in India. They're focusing a lot on women empowerment and supporting vulnerable populations. So they will be the one to share with us their own situation, what has been their the impact in their companies. So we're going to start with I think you all know, and why we are here is to see that, what has been the impact of the drop in international aid. We talked a lot about US aid last year, but I think it's very important to mention that, it's something that happened before already, because in 2024, there was a drop of 7.4% according to the OECD, which was completely new because there has been a big trend of increasing in international aid for the last 10 years. But it started that time. And then, of course, we all heard about what happened with USAID. But it's also important to admit that it's not only, and I think that you have the figures on the left side, I think that you see that, it's not only the USAID, but it started also in Europe, especially in Germany, in the UK, in France, in Netherlands, and so on, in Belgium. And so it's a global trend, and this global trend is going to be, of course, worse than in 2024. We still do not have the figures for 2025, but the OECD is expecting this to be around between a drop between 9 to 17%. We even hear more than 20%. So it's quite, of course, important. Definitely, it impacts more precisely humanitarian support, NGOs, and so on. And it's true that in the inclusive finance sectors, the organizations are expected to be more self-sustainable because they have a real business model bringing them more revenues and so on. But what was quite interesting in the report is that we realized that at least among the respondents, around 58% had direct support from international aid for mainly different type of activities. So even though the sectors is somehow more sustainable in the way it works, of course, the impact is there. So that's why we were quite interesting at the Grameen Credit Agricole Foundation to figure out what was the impact on our partners, but not only. And that's why we joined with SORIS SPTF and the Financial Inclusion Equity Council to make this study and to try to get as much as possible a quite big number of respondents. And we succeeded in having 86 respondents from 58 countries, so pretty large scale. 79% being financial service providers. And if you look at them more precisely, we had 2/3 that were what we call tier two, between managing a portfolio between 50 to 100 million dollars. So it's the large majority. We had a little bit of smaller one and a bigger one as well, tier one MFI. But we had also researcher, consultant that were able to respond to the studies. The large majority are coming from sub-Saharan Africa. And they had also quite a big strong of them working for finance, agriculture, and livestock, supporting these activities and trade as well. So that's and you will have in the report a little bit more details about the scope of the study, and I'm pretty sure that some of the people listening to us right now, and I'm going to ask Samuel, Machuma, or John, just also to cut up your microphone because there's some sounds behind. So if you could cut stop the microphone, that would be perfect. Thank you. So based on this, what have been the main results so far? So the main result is that, yes, globally speaking, I mean, the impact is there. It can be felt, not for the majority of the people, but at least around 60%, for example, mentioned that it has been quite impacted on the partnership they had with different actors. We see also that the other one impact is on financial resources and access to new financial resources. And the last one is on client portfolio quality. And there was other ones, but there were the main three ones that were reported as being an issue for the partners at that time. Sorry, if we go a little bit deeper into the analysis and trying to understand what type of impact it was. So it's clear that the impact comes, and the largest one, which is quite logical, is on partnership, because quite a lot of the organization, like that are, I think, listening to us, have projects to support, for example, climate change adaptations or mitigations. They work on client resilience, on women empowerment, and on innovation, product development. And all the way they do it usually is by combining financial services, of course, but also TA with TA support, technical assistance support to help them to better understand the market, to better help them to design new product or to open new services and so on. And we know that we need to combine both, for example, debt, but also with subsidies, grants, enabled to support this type of innovation and new services. And it's clear that because of some of them, the cut or the reduction of this type of support, the impact has been there, and has been in certain sectors pretty strong. If you look at if you look at the report, we see, for example, we made a little focus on the WASH program, access to water, clean water, where we saw that there has been a big drop in subsidies for this type of project, and that, of course, for the institution, it was some of them have strictly to cut their activities or to reduce them quite sharply. And it's true for also on climate, it's true for gender issues and financial inclusion. So clearly the partnership has been strongly affected, and it has, so they also mentioned that it has an impact on, because it's the second largest one, the third one on portfolio quality. This is a little bit more complex to really, and at least at the time of the survey, the study that was done now almost 7 months ago, it's not really clear to make a direct link between the drop in the portfolio quality and the drop in international aid. It is logical, or at least it's possible to say that, I mean, because most of the vulnerable people that have been affected were receiving support with international aid, and because they didn't get access to this support anymore, then of course they had more difficulties to repay their the loan within the institution. However, if we look at more precisely, we'll say that the impact on the portfolio quality was strong is also rather organization, institutions that are based in countries that had lots of problems. For example, yesterday we were having a discussion for the French webinar with people from DRC. DRC, of course, the impact on the portfolio quality is big, not only because of the cut of the international aid, but the global context in the country. So it happened this. We have the case in Lebanon, for example. So again, at this stage, and maybe it will be quite interesting to hear from Josephine and Akhil, what is their perception in terms of direct link between aid cut and the portfolio quality deterioration. What is clear also is that the size matters, meaning to say that, I mean, the smaller MFIs have been the most affected, and that the largest one, I mean, what we call the tier one, were the one that were the more resilient in that process, and say that the impact is not that strong for them level. There's also a differentiation between the countries, where we see that the most fragile countries are the one also the most affected, and it's also because, I mean, which is a little bit contradictory sometimes, is that, I mean, it's in those countries that the aid cut has been quite relevant. But also at the end, what we see is that the one that are the most affected at the end are the vulnerable clients, especially the one in rural areas that were supported through agricultural financing product. And we know also that for this type of specific products, you need to have specific extra support rather than just debt facilities and so on. So the vulnerable at the end, and then also because they were the one getting access to some kind of NGO support and so on, are quite affected. So if we look at the response, but of the actors and the way they look at it, even though 67% believe that the context will get worse in 2025, but of course in 2026, I mean, it seems that there's a large majority, a vast majority, say that, okay, the sectors is affected, but is globally resilient, meaning to say that, I mean, they went through already quite a lot of crises. We all have in mind, of course, COVID-19, but in some other places, there has been also other issues and so on. So what is clear is that a majority believe, okay, it's an issue, we have to face it, but we feel that we have enough capacity, adaptability to face the situation, to improve slowly the effect of this aid cuts, and that anyway, the sectors will be resilient, and there will be no not necessarily closing of institution and so on. But we have seen on the opposite, unfortunately, on the more humanitarian or NGO sectors. However, we see that 22% disagree, believe that, I mean, the impact is pretty strong. If we look a little bit deeper into it, we look at it's more in sub-Saharan countries. International networks are quite affected as well, and I think it will be quite interesting to hear about Josephine, because she belongs to the International Network of Vision Fund that were also clearly linked with World Visions that has been quite affected by international aid cuts. So this is where we see that, of course, there are some differences in Cambodia as well, and so on. So we see also that clearly the response, of course, varies from countries to countries, from type of institutions, which is, of course, quite logical. What is quite interesting is to see that, I mean, globally, at least 44% say that they have changed their strategy, and they are now trying to focus more or refocus more precisely on portfolio quality, because they believe, especially if they work with vulnerable people, that, I mean, it's an issue for them. I mean, to be sure that the portfolio quality remain pretty good in order, of course, to still attract investors and so on. And they, of course, are looking for new alliances. And we're going to see that this new alliances is more, of course, on looking at local aid from the private sectors. That seems to be one of the solutions. And then we see also that client protection is becoming maybe or take more importance now. I mean, it's already done it, but I think that clearly it's something that needs to be strengthened more than ever because of the impacts that we have on the clients and the difficulties maybe they might have access to other services related to health, education, or whatsoever. The first, in their new alliances, I mean, it's quite interesting to say that, I mean, the large majority, almost, yes, at least 49% mentioned that they will look at more relationship with impact investors, and that they believe that impact investors should be there to somehow partly replace all that was provided by international aid. However, this we know it's of course interesting perception, but we know also that impact investors have been themselves affected by this crisis, because if we look at the Tameo report, it seemed that the last one, it seemed that at least around 32% of the funding from impact investors were coming from public supporters, public donors, and somehow international aid. So clearly, I mean, how themselves are right now in difficulties to get access to funding, so to work on activities remain an issues. So we see these changes, and that's why we call the report "New Paradigm," because we believe there's the world will change, thanks or because, I mean, depending on how you see it, as an opportunity or as a problem, and that the sectors is getting slowly prepared to try to work maybe a little bit differently, or to try to look for new type of alliance and partners. So here we, at the end of the report, we believe it was quite relevant to try to think about what could be the next step in front of this situation, and what should be the way the actors should look at it on the longer term. So we think that is, of course, very important to look at enforce local strategy in alliances. We believe it's, and especially, of course, it will depend on the countries, but there are also lots of resources in most of the countries. And it could be quite interesting to see how, I mean, the actors could work more with, for example, the financial sectors in their respective countries, and how, for example, impact investors could eventually provide not directly debt, but could, for example, provide guarantees to local banks in order to support the actors. So clearly, there's a need to look at what is possible there. I mean, local philanthropy could make sense in a lot of places as well. I mean, how the philanthropy actors could look at it on a little different way. We think it's also quite important to revamp what we mean investment structures, and mainly through blended finance. Blended finance is a key, we believe, a key element in the capacity. You have to bring both public sector's money and the private sector's money, and that for the public sector's money, it's a good way to leverage their impact by being able to attract private investors. There's quite a lot of already blended finance mechanism, but we know there is still some needs sometimes to redesign them, or to be a little bit more proactive, help them to bring at a higher level, and so on. Then, of course, we believe it's important to have to strengthen institutional synergies between the different actors, maybe to try to reduce costs, to be able to bring a diversity in their sources of finance, maybe to work more together and be stronger together. Client protection is and will remain a key issue, especially if we work with vulnerable people. As we already explained, they are the ones that are the most affected. So we need to be sure that more than ever, clients will be able to be protected, and that we are able to serve them with the right services, with the right type of product, in order for them to improve their income and their living. And this is and if we still want to be and more than ever, I mean, impact measurement is also a priority, because we know that if we want to attract new type of investors, new type of philanthropic donors, and so on, we need to prove the impact. We need to improve what we do, the way we are able to improve the life of the people, to improve the income of the people, because without this, it will be more difficult to attract the people. And we know that this ed cut is also new design of or rethinking about what international aid should be. And I think that impact and proving the impact of our action is absolutely necessary. So that's globally the main key, I think, elements. You will see there's a lot of testimony in the report, because we wanted to really hear about and share with you what was the perception about the different people and so on. We do have some few case studies, so I think definitely, I mean, there's much more in the report than what I've just shared with you. Before giving the floor to Josephine and Akil, I just wanted also to mention to you that we are in contact with DEVEX in the US, that is doing a specific project on the impact of USAID drop. So it's not on global. Our study was more on whatever happened, whoever you be was the funders of the organization. Here, the focus is really on USAID. So they want to gather testimony. They want to have evidence-based about what has been the impact on USAID, not only, of course, on the inclusive finance sectors, but on health, education, whatever. So if you do have, if you have been directly impacted because of USAID, please get in touch with you have here the email address of the two person that could be able to, that would be interesting to get your view. So, but anyway, we're going to share the PowerPoint presentation so you can share it with them as well. So now I'm trying not to be too long. So I want to give the floor. I mean, they have 10 minutes to Josephine and Raquel to understand. I mean, and I asked them 3 questions. The first one is to see what is globally their comments on the study, and based on their own experience, do they feel, I mean, that it reflects more or less or partly what we can read on the report, and so what is their perception? We are also quite interesting to hear about how the situation has evolved. The study was conducted 7 months ago, so now how is it? Is it better? Is it worse? I mean, have you been able to adapt it and to make some changes, as it was mentioned in the report? And then, of course, we're quite interesting to hear from the people in the ground, and then maybe also later on during the Q&A question, what you think about the 5 call for actions we have. Do they make sense to you, or do you have new suggestions in order for us to move on? So thanks a lot. I will give the floor to Josephine first, and stop my sharing the screen. Josephine, please go ahead. And of course, if you do have questions, feel free to fill up in the chat bot. Thanks a lot.
Yeah, thank you so much, Felipe. You can confirm if I'm audible, and hello everyone. when I looked at the study, I think I was one of the people who were able to look at the questions that were being asked and just seeing the report for Vision Fund that spoke a lot on what is happening to Vision Fund globally and also here in Kenya. And for Vision Fund, being a subsidiary of World Vision, and we depended a lot on private funding, which we could combine with our private capital. And given our mission and our vision of being able to reach to the most vulnerable people in the communities. So the funding that was being given through our vision and also from other partners was helping us in reaching those communities that otherwise we could not have been able to reach, the most vulnerable, the financial excluded people. On projects such as WASH, we had agri-financing, we also had other women-led economic programs, agri-climate, the funding that was coming to FSPs and mostly VF. This was helping us to reach to these communities. And we could do this by just preparing them so that they can be able to get funding from microfinances. And we mostly relied on training that was being given to them. Like we do Empowered Worldview training to ensure that we change their mindset, ensure that they understand about the resources available to them, train them on financial management before we could actually give them these finances. And also the availability of the subsidies through this funding could help us even to go to the most riskiest places where otherwise we could not have gone. And this affecting largely globally VF and also World Vision International. This has shaken that mission because where we could go before with these products that we were giving to these vulnerable communities. Right now, we are not able to go there. So when talking about partnership, as you have seen from the report, most of the partners that we could work together to co-develop products, they also relied on the funding. And so the reduction of the funding has shaken the partnership that most of the FSPs and mostly Vision Fund, and in this case, Vision Fund Kenya, you're finding that now getting this partnership is becoming a challenge. And also the availability of the financial resources also has also been shaken because where we could easily get funds and especially funds that could give subsidy for those products and especially the youth-led and the women-led. Nowadays, that is not easy. And also when it comes to also giving loans, I know that we have talked about the portfolio quality being affected. And for Vision Fund Kenya context, this has been seen for the past around 1 year. And this is because that before we give our clients loans, what we do most is build capacity. And training, like now the mindset training, the empowered worldview, which had helped us a lot when it came to also loan repayments and also customers just being reliable and knowing how to manage the finances. And with the reduction of this, the funds, we're finding it that the operation cost is increasing. And most of FSPs and VFK, what we are trying to do is to reduce the operation cost so that we can both be sustainable and ensure that we are having impact to the communities. So some of the trainings that were being given to these communities, some of the subsidies that could be given to these people so that they can at least grow their businesses, with the reduction of the funding that has created a huge gap, which this is actually now causing the effects of the portfolio quality. And also feeling that you're not sure whether you want to go to those interior places anymore. And through going to those places, we used to get the numbers. So that means even disbursement amounts are also going down. And that is also affecting the loan book. So what we currently doing as Vision Fund, we are very intentional on impact measurement, which has been our key area of operation. And through the support that we get from partners like 60 Decibel, we are able to do internal and external studies for us to be able to understand what our clients saying, what are their needs, the products we are giving to them, are they helping them, and which areas can we now go deeper through the feedback that we get from these impact measurements, and which is also, I know that it's something that most of the donors and the impact leaders are looking for. They want to see the FSPs measuring their impact. The financial service providers, are they doing what they're saying they're doing? Are they protecting their clients? And so for Vision Fund, other than just doing the impact measurements, we have gone ahead to do even studies like the ones that we're doing with Ceres plus SPTF. We want to know, when we're saying that we are protecting our clients, given that when the funding reduce, microfinances may be tempted to increase the interest rate, maybe overfund the clients for sustainability. And so to cap that as VF, what we want to do is to ensure that when we're saying we are protecting the clients, we are doing what we are saying we are doing. And to ensure that the donors are confident with the with Vision Fund, we have gone ahead even to do some certification on cloud protection certification. We are doing social rating. We are looking at things like ESG, coming up with policies and also implementing them so that we can ensure that we are complementing the reduction of the funding, and also positioning ourselves to the local and international philanthropists and also other donors. And also, Philip, me talking about the 5 core moving forward, what have been suggested on the local cooperation. I know, like in Kenya, we have private companies that do CSRs. We have people like Safaricom who maybe give money and they would want to reach the most vulnerable people, but at their context, they're unable to do that. So we are partnering with this kind of local partners. It's going to help us as Vision Fund Kenya and probably other microfinances here in Kenya to be able to reach to those vulnerable communities where without the funding, it would be impossible to do that. So on signage, that speaks a lot about the Tier 1, Tier 2, and Tier 3 FSPs. We have Tier 1 organization that probably they are unable to reach the most vulnerable community, but they can do that through partnering with other Tier 1 or Tier 3 MFIs, give them funds so that they can accomplish what they wanted to accomplish through them. So the signages, that I think is also a great idea, not only for VFK, but also for other FSPs. And on client protection, as I have said, that we need to position ourselves well so that when we're saying we are protecting our clients, that can be seen not only through us just talking about the interest rate and the products that we are giving, but ensuring that we actually providing what the most vulnerable and other community members want. So yeah, and I would say that this is possible through the impact measurement. Most the MFIs need to be intentional on ensuring that they understand their clients they're serving, understanding the gaps that are there, because in the past 6 months, Felipe, most of the MFIs and even VF, we being forced to relook at our products, redesign the products to fit the context which we are in right now. And of course, we are also looking at how do we deliver these products? How do we leverage on technology to ensure where we could not reach, at least we can be able to reach them. So also looking at how do we cut costs, as you have said. how do we ensure that we are looking at the most important things that are supposed to be done by the MFI and reducing the operation cost so that we can bring a balance on sustainability and also on the impact that we are creating. Felipe, actually.
Thanks a lot. Thanks a lot. I have one or two questions, but anyway, I will give the floor first to Akhil for giving us the Indian vision about what is happening to you and what has been your reaction with this report. And thanks again, Josephine.
Thank you, Philip, and hello to everyone, and namaste from India. I think, Philip, that the report which has been published and the study which has been done is not. This is the best timing it should have been done, and it has been done. And I say this report is just showing the tip of the iceberg. The problem is much bigger. We are just reflecting the tip of the iceberg. Because what is happening with the cut of the international development aid, it's affecting a larger ecosystem. It's not affecting A institution or B institution. It's a coercion, it's a effect, it's a negative impact on the larger ecosystem, and in which the communities, the institution, the vulnerable groups are getting affected. And this is gradually building. Yes, when you say what was the situation 6 months back and what is the situation today and what will be the situation after 6 months, this is going to deteriorate if not required interventions are done. I would start my submission by saying that we have touched upon few things: aid, debt, equities, microfinance, financial inclusions. But the entire philosophy was to reach to the bottom of the pyramid. It means the vulnerability is at the bottom of the pyramid. And with the reduction in the resources, anything percolating down reduces. And when the percolation goes less, the vulnerability increases. And the trends have been, this is not all of a sudden, there was a gradual thing, but with simultaneous actions happening, that on one side, the focus of the impact funds started shifting. And at the same time, unfortunate, the international development aid started cutting. So the civil society and the NGOs started getting affected, which were working more on right-based approach and soft side. And with the impact funds and debt and equity market shrinking, the financial inclusion space getting affected, and both simultaneously gave a major hit to the people at the bottom of the pyramid, the communities. Now, we need to understand countries like India or Kenya or Bangladesh or developing economies. These are very informal circular economies, and they are dependent on certain consistent factors. There are certain assumptions. Aid will continue to come, be it from government, be it from international agencies. NGOs have a role to play. Government has a role to play, and national and international agencies have a role to play. On basis of these assumptions, the people who are living below poverty line or at subsistence level, based on their assumption, they take certain risks. They borrow money, they put it in livelihood activities, they put it in agriculture, assuming certain risk can be mitigated through aid. If there is no proper rain or there is a flood, and if there is a loss of agriculture crops, something will be there to help them to mitigate the risk. But with the cut of resources, everybody is shying away and going away, that we are not going to share your risk. So the entire risk is now being handled by the community itself. Now, what happens once the aid starts going down, impact fund starts going down, debt and equity market starts going down, it creates a vacuum. And as you said, it can be seen as an opportunity for some. So what happened? The market get more aggressive, not more submissive. And then there are private funds, there are money lenders. India always had a history of money lenders who become very aggressive, who were very dormant for many years because microfinance institutions were replacing them, and they have become active again. So the cost of money, the cost of funds to the women and to the microfinance customers have significantly gone high. Maybe the regulated agency has not allowed MFIs to increase the rate of interest in India because it's highly regulated, but informal money lenders started coming into the market. And then there are private funds, and then there are apps which says you can take loan in 10 minutes, but nobody realizes that that 10-minute loan which I'm taking through an app the rate of interest is 120% or 60% or 80%. I borrow $10 and I end up paying $500, with the cumulative rate of interest. So a lot of such stories, lot of such suicides, deaths are being noticed. Lot of young people getting into these traps because the resources are drying, and wherever they see a window and an opportunity of money, they try to tap that resource without realizing what is the hidden cost, what are the risks of those resources. Now, what has happened? Women, youth, children, farmers, migrant workers, because India is a circular economy, a lot of migration is happening within the country. It's a huge country. These are the people who are affected. And because of this, the nutrition level, the education, the health, the recreation, the social security, everything has got affected. So what we had built over a period of time, since it has been a long history of investment, it will not crumple down all of a sudden. But if this trend continues, whatever we have built over years is going to shatter down, it's going to shut down, and people will be back to where we started. We are going to be in Stone Age back, to be honest, when we are talking of the bottom of the pyramid. Then what is with this cutting of the resources, what has happened? Any scope of innovation, any scope of creating very need-based products which are very niche in themselves, or covering the risk over their launch or meeting their operational costs, nobody is there to do that. Nobody is even thinking about that. It's right now, it's all about survival and not about innovation. It's about somehow, can I survive? So what is happening? The ecosystem is dynamic. It is throwing new challenges. The society, the community, the economy is throwing new challenges. But we are not responding to those new challenges now because of the lack of resources. So there is going to be a big conflict and a big gap. Now, also for example, I was reading recently that for a wash, a big debt was given to a company which is going to create toilets in the schools. Now, I was wondering that schools infrastructure versus community-based wash program, which is more needed, okay, very important to have toilets in the school, but what about women, adolescent girls? And there are a large population who doesn't go to the school because in developing economies, a lot of children work, they don't go to school, and they are in the slums or they're in the villages. So where do we put? But the agency which is giving money doesn't have a risk appetite to give it to microfinance because they feel the portfolios are at risk. And this is where what you mentioned, the NP and the portfolio performances. So in the most difficult time, we are shying away. We means the agencies, the debt agencies, the equity agencies, the funds are shying away to mitigate their risk, and rather than having an appetite to take the risk and support and reinforce it, they are pulling it back and putting the money in the safe place. Putting the money in the safe place will help money to be safe, but will not address the vulnerabilities of the people at the bottom of the pyramid. And this is what has happened with this cut of resources. I think to sum up, what is required is that who is going to, when I say it's the tip of the iceberg, I'm talking about the larger ecosystem. Who is going to influence this ecosystem? There has been always a pull and push between profits and impact. So are we going to be an impact-oriented institutions creating, talking about ESG? I heard Josephine talking about ESG, climate smart agriculture, adaptation. These terms will start fading away. We have to again, after years, remind people there is something called climate smart agriculture and adaptation, because the farmer is struggling to even get them 2 squares of meals, forget about not using only organic manures. So equity, debt, and aid, these are the three things: the grant, the debt, and the equity. Now, certain instruments like you mentioned, risk funds, returnable grants, huge need of the hour, but blended finance. But these are being discussed in the conferences, in the seminars. They are not reaching down. They are not reaching to the people. Lot of conferences, I have stopped attending few conferences now because same stories, but where is the money? Where is the blended finance which is coming in and making sure the money is reaching to the people? We need it now. We need it today. Yes, discussions are required, strategies are required, but we need to also go into the action. And in the last, I would say that we need to make our choices very clear, that what is our mission, what are we contributing to, what kind of an ecosystem we are creating for present and future generations, because The vulnerabilities always come with a cost. Addressing the vulnerabilities is always with a cost. And if we don't bear that cost, we are going to enhance the vulnerabilities rather than addressing them. I think I'll stop here and make the floor open. Thank you.
Yeah, thanks, Akhil. Thanks a lot, Akhil, and not very optimistic somehow position, but I think that the ideas of the iceberg is the image of the iceberg is pretty relevant, unfortunately, in the context. Do anyone has any, because I don't see any questions so far in the chat. So is there any questions or remarks? And you can take the floor, open your microphone, I think, if you want. If not, I might have a few questions. Yes, Vladislav, you can go ahead.
Dear colleagues, thank you very much for your presentations and your opinions. It is indeed a very important topic these days. The coalition of willing people around the world feeling very high strain and pressure from the people who would like to impose the force and their own business interests. So my question will be how to unite these good people of the world, people who are involved in charities, in programs of development, in microfinance. We feel like in Ukraine, we these days feel a lot of compassion and coordination between people who gather money, organize support on the front line, in the backyard, to make people live, survive, and feed, help in freezing situation, weather. And this network works mostly through Facebook chats, and sometimes we understand that Facebook algorithms are not that optimal and not that fair. They promote, in many cases, much further the fresh expression of Mr. Trump or his partners, rather than requests for help or campaigns to gather support. In many cases, we tried to use the sites of organizations or some previously funded by USAID communities wanted to establish their own network or their own platforms, but unfortunately without support, these projects were not sustainable. Could we think about some kind of global Facebook for NGOs, or I don't know, LinkedIn for NGOs, where we all register as a people, not bots, where we all show our track records, where we can publish our results and therefore protect our records and protect our reputation, with possibility to share experience, to share ways how to raise money, how to learn doing NGO job, and partnership with public and private donors. I think this type of networking would be of immense help for each of us in this area.
Thank you. I think that what you're mentioning is I think key in terms of how to. Yes, I think that we are all better and stronger if we are united. But I think that if we talk at the global level, it's kind of big issues. At least in the financial inclusive finance sectors, there are some networks, some actors that could take the lead. I think on that strange on that field. We do have a few questions. There's one on blended finance, to say that they want to better understand why blended finance has been one of the call to action, because the person say that I feel that in the past blended finance has not leveraged private capital as it was supposed to be, and how should this blended finance look like? And then there's another one. Thank you for your invitation. Blended finance, the first priority in sustainable development at the moment. In your opinion, what needs to be done to make it actually get to the most vulnerable at the bottom of the pyramid? So on blended finance, I don't know if Akil or Josephine, you want to answer. I do have some potential answers, but I mean, what is your view on this? If you want to
Yes,
answer,
Philip.
please.
Okay,
Yes,
like
go
that,
ahead.
I can go first on the blended finance. And when we talk about the blended finance, we're talking about things like the concessional funds, the grants, the subsidies, and why this is an important call to action. It's to help the FSPs to lower the costs, either the operation, the cost of finance. So that's what I would say. And I think the most important thing is understanding the role of each partner. Where do they come in? That's what I would say, Philip.
Thank you. Akil, some comment?
Yes, I think blended finance is a very strong instrument, not a leverage. I totally agree with the person who has given the comment and for various reasons. I think the first loan default guarantee, FLDG, is a very powerful tool which blended finance can bring in. It's a bridge for when the equities or investments are drying, and particularly now when the development aid is cutting down. Blended finance has a very important role to play because the blended cost is very cheap, and that cost should be passed to the bottom of the pyramid. Now, that's where the transparency and ethics also comes in, that I may receive the blended finance at a lower cost, but I may still pass it on a higher cost to the customer. So that's where the transparency parameters are very critical. Third is providing the risk guarantee so that it can attract more money. As we say in money world, money pulls money. So the blended finance works as an anchor to raise more money so that we can serve more population, because microfinance is the only fuel is the money. So blended finance plays a very important role. But what is happening, the confusion is lying whether blended finance is going to help in aid programs or in profit making centers or somewhere in the middle. So blended finance is going into health, or is it going into financial inclusion, or is it going to go into agriculture? And specifically, it need to be drawn. The scale also has to be big, and there should be a facility for smaller, medium, and bigger. So if only the bigger one continues to get benefit, and the smaller ones who are reaching to the remote areas, to the tribals, to the excluded communities, get excluded. So the instrument itself has to be designed in a such a way that certain proportion of blended finance should be dedicated for the agencies which are working with some exclusivity or with some excluded groups or categories of vulnerable communities. But at present, it plays a very important role, but it has not been optimized. Even in Indian context, blended finance is not very visible. It's there, we are talking about it, but very few are able to get the benefit of it.
Thank you. I agree with what has been said. I mean, as far as I know, if I'm not wrong, I think that the CGAB is starting to conduct a specific study to analyze all that has been set up. What are the different type of blended finance product that have been on the market or still there? And the idea is really to see how, based on the past history, which was, I think there was lots of promises, but at the end, I mean, it was a little bit disappointing, at least compared to all the expectations we had with this type of instrument. So let's hope that this study will also give us a little bit more view, but I think it's quite complex because as far as we know, we see that, I mean, I would say we need to have the public, of course, investors, and we see that they are reducing their commitment. And we see also that on the private sectors, and I think that one of the issues with the private sectors is the capacity to prove the impact about what we do, and the capacity we have to show, I mean, that their investment will make a difference. And that's something that, of course, remain an issue within the sector. I'm part of the Infine network in Luxembourg of the inclusive finance sectors, and we are working a lot on how to work on de-risking mechanism, which is also part of this type of approach to try to attract new investors. And it's clear that, I mean, in the current context, even the private sectors, I mean, they do have I mean, we see it, for example, with other regulation in Europe with the SFDR and so on, where we saw that, I mean, the investors would rather go to more less risky perceived sectors rather than what is perceived still as risky, especially to invest in developing and emerging markets. And these issues of reaching emerging markets remain quite strong, at least at the European level. So that's why I think it could make, and that's why we believe that also to put a lot of pressure at the local level is very important, because the risk perception at the local level is, of course, very different compared to the risk perception that we might have here in Europe or in the US towards your market. And that's, of course, where I think the government can play a pretty big role. I mean, for example, we know, and I don't know what is your position, that, for example, in India, I mean, the government with your priority sectors and so on has also pushed the private sectors to invest more precisely in not only inclusive finance, but in other sectors. It happens there, it happens in Egypt and so on, but what about in other countries? How it makes the difference, how you manage this currently, I think it's still open question. Is there any other questions, remark? No question. No. I do have one question, because in the French in the French webinar we had yesterday, there was all this question about how it has impacted the savings of the clients, and because it was potentially one of the sources, of course, for the MFIs to keep growing and developing their actors. So do you know, in your case, for example, Akhil, I mean,
yes. I think that's a very important point. It has significantly affected, and that's where, when we talk about resilience, saving has saved them. What we say in India, there is a saying, saving saves you in difficult times. So it has affected the savings, and you know that it's all about access to resources. The women in India, through microfinance and financial inclusion, had lot of access to resources. Now, that was also contributing to their social and economic empowerment. Women's status was being respected. When the women members of the family used to carry loan to the money in form of loan to the family, the men members used to respect her, you know, give her a lot of appreciation and all, because she was bringing money to the family. And now if that starts getting reduced or start getting less, again, whether that will sustain or not is a big question. And the women are the members who are the most, who were doing the saving and keeping money for the crisis time. And it has significantly affected that. Yes, it has significantly affected. And that's where insurance programs, saving programs are being discussed. That if we can have those programs, which definitely reach out to the women, because in Indian context, I don't know about other countries, women play the lead role as far as saving at the family level is concerned.
Thank you. Anything to say, Josephine, on savings? I'm not sure that you can collect savings.
Yeah, we for Vision Fund, we do not collect savings, but we have a program called FAST that we work together with World Vision, and that is we do trainings on saving for transformational. And so when these trainings are done by the World Vision, these groups are being given to Vision Fund, and what we have been able to note is the savings are declining. And what the clients are saying is because of the hardship that they are going through. So yeah, this has a direct impact on savings.
And just a clarification, Philip, in India also, microfinance institutions are not allowed to take savings, but the group of women themselves have a saving component among themselves. So they open their account and do the saving, what is called self-help groups.
Groups, yes.
Yeah, the groups. But microfinance institutions are not allowed to collect any savings. Regulators don't allow that.
Yeah. Okay, I think that we are on time. Is there any other remarks, question? There was a remark in the chat related to, again, to blended finance, and to say that, yes, it's true that we need to rethink definitely and redesign maybe those mechanisms to be sure that it's at the end is going to reach the bottom of the pyramid, of course, and I fully agree with you, Akhil. I mean, blended finance is now in all the conferences. topic to be discussed, and I've talked about it in all conferences myself. So, but I fully agree, and that's what we are trying to do. For example, within in Luxembourg, within FINI, where we try to come up with new things, and in order to be able, I don't know if we're going to succeed. Even though it's true that in Luxembourg, it's a country where it's one of the rare countries that remain with a 1% commitment to international aid, and they didn't reduce it, which is, I think that we should all take some example about this type of commitment. But yes, I think that we need definitely to be able to better work on rethinking how we design the product and how we are sure that at the end it raises the most vulnerable people, because we also know that most of the vulnerable people unfortunately remain always the one that are the most affected by all these activities. So I definitely want to thank you. One of the person was asking where we could find the study, so I put it on the link on the chat. But anyway, you all will receive as I mentioned to you, the recording of the presentation, and we're going to send again to everyone the report. Thanks a lot. We definitely do not want to stop here. I mean, I think that Vladislav mentioned that we need to do things. So I don't know. We certainly move on with maybe we were quite interesting to see what we could do more in terms of sharing the information. We don't know yet if we're going to conduct another one, maybe in a few months, in order to be sure that to see how things have evolved in the last year. But we might have other webinar where we can try to drop more this, make some reports, and of course work at the level of the different actors that could do something, from the regulators to the private investors to the impact investors, but also to government and so on. So thanks a lot. I wish you an excellent day or morning or evening, wherever you are in the time frame with us. And thanks, of course, Akil and Josephine for the time with you. Thank you, everyone. Bye-bye.
Thank you very much. Thank you, everyone. Thank you.
Thank you.
Thank you.
Thank you very much.
Thank you so much, everyone.
Thank you.